Hi, welcome back to Elements in Focus. Grant Sullivan and Aaron Rheaume here. We got a great topic today, and that is in our risk management. How much insurance should I have, and why is insurance an important piece of our planning tool belt? So, Grant, I'm going to turn that over to you. Again, how much insurance should I have, and why is insurance an important tool in our tool belt?
Absolutely. And Aaron, thanks for tossing it all, over to me. I really love this topic. It's where I started my career, was in the risk management space. I think so, as did you. We did not have such deliciously handsome beards back then, but hey, you know what? I'm glad to have them now. But looking at how much should we have and why, we could take a step back and remember that when we're purchasing risk management or insurance, we are leveraging a risk to an institution, right? Because the magnitude, the effect it would create on our lives is not something we can save up enough for, right? So there's four ways we can get rid of risk. And the one way we're going to focus on today is transferring that risk to an institution, aka an insurance company. And why? And the question deeply is rooted, how much should I have, on death, right? Death benefit from life insurance is one of those really big areas, right? That if, for example, my wife and I, if one of us predeceases each other today, that would leave a monumental hole in our situation, right? Because now I'm down one income and I got mouths to feed, right? So at the end of the day, that would really wreck a situation. So I'm going to transfer that risk to an insurance company, right? I'm going to pay pennies on the dollar year over year in the hopes that I never have to use this thing. Because if I did, that means my family is really, unfortunately, not in a good position. So that leads us to the question, Aaron, and that is, how much do I need? Now, you never want to put yourself in a position where you're one argument away from your spouse being a millionaire, right? I jokingly tell that to my wife all the time. Sometimes we'll get in a little tiffs, and she's like, "How much is your death benefit?" I'm like, "Oh, nothing. We actually don't have any more." So, realistically, all jokes aside, though, let's evaluate how to look at insurance. Insurance, in its primary function, is to add liquidity back into a family situation, right? And so, let's use an example back to my wife and I. So, if I pass, right, she's going to need an injection of capital, not just to get her through today, but potentially get her through a whole lot of years, because I don't expect her to just turn around the next day and find somebody new, right? She probably could and be way better ahead, but right, that's not something I'm requiring or even would think she would have to do. I don't want that to be on her plate, especially in the time of mourning. So how do we evaluate how much liquidity to inject back into the family system, right, or the family unit? And so you can use a simple acronym called LIFE when it comes to death benefit. So fancy enough, life insurance, we can use L for liabilities, right? How much liability do we have? How much debt do we carry? Student loans, houses, cars, right? You name it. Is getting rid of those liabilities something we want to erase, so our remaining spouse doesn't have to deal with any of that? Okay. The next one in life is I, for income. How much income replacement do we want for our spouse? Now, life insurance companies, from an actuarial's perspective, will go ahead and have tables set up, right? So I just can't go to a life insurance company and say, hey, I want 100% of my income guaranteed in case I die the last 50 years for my spouse, right? The insurance company is going to laugh because they're not on the docket to replace. I'm sorry?
Said not insuring you. Sorry.
Yeah, no, they're not going to insure me, right? That's a liability they don't want to take on. So, but it will look at your income and your age and give you a factor, right? So we've seen families be able to get $2, $3, $10 million depending on their income and age, which is important because there needs to be some replacement. And remember, though, the more death benefit you add to the pile, and the older you are, the costlier it gets. So something to consider. F, right, is for us final expenses. For those of us that have unfortunately had to say goodbye to precious family members or friends, right? Those final expenses aren't cheap and they're only getting more expensive. Now, do you want to take out a $1 million life insurance policy for final expenses? Maybe if you're having one heck of a party, right? But for those of us really between 25 and 50,000 when looking for that celebration of life. And then finally, E, education, especially for those of us with young children. If a spouse was unfortunately called home early and we have those young kids and education was a very top priority for a goal that we had for our children, then maybe setting aside some dollars for educational planning is important to that family, right? And so looking at the LIFE acronym, it gives us an idea of how we can build that repurpose of capital or reinjection of capital into the family unit, and looking at how much you should have. Typically, for an individual who's earning about $150,000 a year with a family of four, you're looking at anywhere from $1.5 million to $2 million on average, depending on the needs that LIFE acronym. And that's what we generally see. But I would tell you, don't just go off that number. Have this evaluated with a true professional who understands your situation, because there's other things we're going to have to analyze. Disability income, right, is one that gets kind of left behind, but realistically is the number one reason why we have defaults and mortgages in this country. Is someone, a primary breadwinner, lost their job and they didn't have enough coverage to protect their income while they were still alive. So this is kind of a mixed bag, Aaron, for how much we should have, because it also goes into, right, how much is your umbrella policy, your limited liability coverage enough? Do you have the right protection on your vehicles? So when evaluating this, how much should I have? If we're specifically looking at life insurance, think of the LIFE acronym, and we can spend time in other videos going through other topics as well.
Great summary, Grant. We use the LIFE acronym because it's the most basic thing to do. As a recap, L stands for liabilities, I, income, F, final expenses, and then lastly, E is education. The other caveat that I would throw in there as we wrap up is on that education piece as well would be care for your kids. So if Grant's example, you have a young family of four, you have to have that income replacement, but also factor in how old your kids are and what type of care that they may need. So do you have them in daycare? Are they into private schooling? There's just a lot of little nuances that you would want to add into that. But again, LIFE acronym. If you want to have that deep dive into an insurance conversation, making sure that you have the right protections in place with umbrella coverage, your auto policies, your homeowner's insurance, your life insurance, reach out to us at FEG, and we would be happy to evaluate that on your behalf. Have a blessed day.
If in our conversation today something was sparked deep inside you and you feel like you want to evaluate your current financial journey, please click the link here. We'd love to schedule a complimentary meeting to sit down with you and navigate the potholes that may potentially be lurking around the corner in your financial situation. One of our talented team members will help you figure out where you are, figure out where you want to be, and then give you key critical things that you can think about today and tomorrow to make sure your financial journey remains intact.